Carol Massar joining us in the radio booth alongside David Gura, filling in today for Tim Stenovic. Welcome to our audiences across all of our Bloomberg platforms, including our partnership here on YouTube. And Carol, you talk about the market reaction to that Fed meeting, the market reaction to Jay Powell. Not quite what we expected.
No. First of all, I was surprised by the 50 basis points. Kind of shocked me. We saw such a significant, or decent, I should say, equity rally right off of that. And then we've seen stocks retrench. So I feel like investors are still trying to figure it out. Does 50 basis points, David, does it mean that there's some troubles ahead?
Yeah, and I just was struck by how emphatic Chair Jay Powell was during the course of that press conference, saying the Fed is not behind the curve here, saying things are different than they were back in July, saying this isn't a sign that they missed the ball back at that last meeting. Very forthright. Also, promoting a lot of clarity, a lot of caution going ahead to this next meeting that, it's not divine, it's not gospel what's going to happen next when they meet again in November.
But I am interested into the reaction function, right? It's very clear that they have zero tolerance for a weaker labor market. So what does that actually mean? So you get 1/10 of a tick up in the unemployment rate. What is that then reaction function? They're expecting 4.4% for U3 in 2024. So how do you then trade something like that?
And particularly, too, when we talk about this idea of that neutral rate coming up, at least their projection for it at 3.4%, definitely higher than what the market had priced in. So maybe you get a bit of a repricing. But as we always have to point out here, the market reactions that you typically get on the day of these Fed meetings can change in a big way in the days that follow. Here on this Wednesday afternoon, Fed Day, the screen looking a lot different than what it looked like just a few minutes ago. All red across the screen with the Dow Jones Industrial Average down roughly about 100 points on the day, or about 0.2%. The S&P 500 down about 16 points or 0.3%. A similar percentage drop for the NASDAQ Composite, as well as the NASDAQ 100. And if you're looking for outperformance, well, there you have it on your screen, and it is minor outperformance. The Russell 2000 fractionally higher here on the day. We'll just call it unchanged. S&P mid-caps also similar move, and the Dow Transports a little bit better of a performance, though that's only up 0.4%.
Right, small caps at their highs today, up almost 2.5%. In terms of the S&P 500, though, if you look at it, almost an even split. More than 200 names actually gaining ground here at the close. 286 to the downside. So, Alex, a little bit more of a negative tilt.
Yeah, and you take a look at the IMAP. It is mixed, but I think that what it's mixed by is quite interesting. You have, well, actually, it's not that mixed. I was looking at mid caps. You're actually looking at the majority in the red. Utilities, though, not doing as great, and that's so interesting because if you were going to have a 50 basis point cut, you would have thought that utilities would have done really well, but that necessarily isn't the case today, which just shows that we can't really predict how the market's going to react to this. You have tech getting hit as well as financials.
Not a brat mat. That's a map, not on this Fed Wednesday. All right, let's get to some of the individual gainers, folks.
You're so hip, Carol.
She was just in L.A. Was it L.A.? Where was she? She was somewhere cool.
She never tells us where
she was. Somewhere cool.
She just disappears
there we
in the
go.
high seas for days.
Highly recommend doing a show on the beach.
Yeah.
It's a really good thing.
Thanks for rubbing
We'll
it
work
in.
on that.
Back on that, yeah.
You're all invited next time. All right, let's get to some of the individual gainers. GM finishing off its highs, at its highs up more than 4%, but still a 2.4% gain here at the close. A top gainer in the S&P 500. The company's EV customers can now tap into the Tesla I superchargers starting this month. Remember that an agreement last year between Mary Barra and Elon Musk. So some upward sentiment, if you will, for General Motors. Victoria's Secret, check it out, guys, up about 3.5% here. The company was upgraded. The stock was to equal weight from underweight over at Barclays, which said the worst is behind the company. Also raised the price target to $25 a share from $23. So the stock finishing pretty much at $25 a share in today's session. HubSpot, another one, an outperformer, up 2.3%. Call options also tripling today. Our BI team out with a note talking about the company's analyst day, saying the company's position in sales, marketing, and service software continue to strengthen in the small and medium-sized business segment due to AI innovation and more. And they also noted some of the company's product launches. So that's some of the outperformers here today, David.
Looking at those underperformers today, a few caught my eye. Zegna Group, maker of men's suits, men's clothing, Italian company, went public via SPAC back in 2021.
I think Romaine, your suit came from there.
I didn't want to call them out. Perhaps it did.
He has a whole wardrobe here. That's the thing.
Anyway, flagging that profits were lower there at that company in the first half of this year compared to the quarter and a half before
so
that.
I can expect some discounts?
There you maybe
Now you're talking my language.
Time to
Check
go
it out.
shopping.
Anyway, kind of emblematic of the fact that luxury is going through some difficult times here. The CEO saying today that it's going through an important normalization phase given macroeconomic and geopolitical uncertainties, and the overall environment is expected to remain even more challenging in the weeks and months ahead. Another company suffering a little bit today is Cisco, food distribution company. The CEO of that company speaking at a Wells Fargo consumer conference in California today, saying that traffic is down at restaurants by as much as 3 or 4% and sees that being a persistent problem going forward here. That company closing lower. And then Trump Media and Technology Group. We are at this pivotal moment. Of course, Donald Trump owns more than half of that company's stock, more than $1.8 billion worth of it. The lockup period by which he can't sell that stock ends tomorrow, provided those shares don't close lower than $12. He says he's not selling. We'll see, but the company continues that kind of downward slide we've seen since March, when this company was trading above $60 a share, far below that today.
So that's sort of the micro look. On a macro level, we go back to the bond market. We're looking at a sell-off all across the curve. You got the 2-year yield up 3 basis points. The 10-year yield is up 7 basis points. That's the most since August 15th. I know it doesn't seem like that long ago, but a lot has happened since then. But what's so interesting, if you look at an intraday chart of what the bond market did, particularly in the 2-year, you get a 50 basis point cut, you got buying right away, and the yield falls. And then as the conversation continues and the presser gets underway, and it seems like the Fed is in no rush, you guys, to do any more 50s. They're in no rush to cut dramatically and drastically, and then you wound up seeing the selling kind of pick up, particularly on the long end.
There's a big question that I have, though, and the question is, when we look at the targets that they have on the dot plot and what Jay Powell said today, how much can you really take that as gospel here? I thought Mike McKee, when he sort of broke the news at 2 p.m., he pointed out a couple of big things. This was the first dissent that you've had on the FOMC since 2022, and the first dissent by a Fed governor since 2005. And he seemed to suggest here that this might be an expansion of that type of dissension going forward over the next few meetings as everyone tries to figure out where we're going.
Which makes you think about the future discussions, right, around the dot plot as new data comes in. I was thinking about tomorrow at 8:30 a.m. Wall Street time, weekly jobless, like these weekly reports, which are much more timely data than the monthly jobs report, David, become even maybe more important.
We just have to keep thinking about the crucible in which this is happening. Of course, we have an election coming up. This was the last meeting before that election. The next Fed meeting takes place a day after people go to the polls here in the U.S. This Fed chairman emphatic, as he has been before, growing increasingly irritated, I think, with this question that the Fed might be susceptible to political influence, saying that wasn't the case here. That's not going to be the case going forward. But we already have a statement from Vice President Harris applauding the Fed for the move that it made today. And then we have Donald Trump, the former president, here in New York tonight at a big rally in Nassau County. He's trying to get folks elected down ballot. House races in Hudson Valley and in Long Island. No doubt this is something he's going to bring up during the course of the speech that he gives tonight. So we'll be listening closely to what he has to say. He's kind of questioned the merits of the Fed's sort of very storied independence in past speeches.
Mention salt, and all of us in the New York metro area,
True.
it
Very
definitely
excited by
catches
that,
our
yes.
attention.
We start to pay attention again. It's 100% true. But if we go back to where we were last Thursday, so that was more of the 25 camp, right? And then you had the Wall Street Journal article come out on Thursday night where Nick Timrose talked about the fact that 50 might be on the table. Then you saw the market re-rate on Friday, and that continued. So in my mind, don't you just like kind of check out and check back in 4 days until the next Fed meeting and see what we're talking about? I mean, that's kind of what happened.
I think that is kind of what happened. It's kind of basically the Fed did meet the market, and the market was happy with that. And like I said, what happens over the next couple of days? But I thought, just to David's point, too, about the political I don't know, implications, if you will. I know Biden is supposed to speak on this tomorrow. You do wonder how this is going to sort of play into the election cycle as people now start to talk about inflation coming down. Maybe interest rates ends up being a net positive for some people's pocketbooks. I don't know if it's going to come that fast, but that'll surely be the pitch that you might hear out of Harris and Biden. I don't know if you're going to hear that from Trump because, you know, why?
Well, all I would say off of that is watch the housing market, watch the mortgage market, right? If people start to buy houses, that's certainly some economic activity. That would be a new trend that we haven't seen in some while if we start to see
I have a dream of buying a house one day.
It'll happen. It'll happen.
Well, if you stop buying new suits, you might
right,
be able
there we go.
to
It all comes full
afford.
circle.
No, but he needs the brownstone for the suits. Guys, it all works together.
Yes.
It does. It does.